Morning and welcome to the TRG Money Minute, slightly longer this morning. Tito Mboweni had his first medium-term budget policy statement last week, and here he showed the bad news was that South Africa's fiscal position had worsened, our budget deficit expected to be at 4% and debt to GDP expected to peak at just under 60%, and this was really due to the inability to curb expenditure and having to borrow more. There were bailouts for SAA, but the good news was that the outstanding VAT refunds will soon be released. And there was also positive talk around public-private partnerships with our SOEs and a defense of the South African Reserve Bank's independence, which is crucial. Overall, it painted a tough picture, lots of work still to be done, but hopefully we have the will to do it. Unfortunately, we saw our currency and government bonds weaken post the address, and it also resulted in Moody's issuing a credit negative report on Friday. Then we had the inaugural investment conference in Sandton, and after 2 days of the conference, South Africa had received a commitment for over 20 billion of investment pledges over the next 5 years. Couple that with the $35 billion, let me say, that was already secured, and we're well over half the way towards President Ramaphosa's $100 billion target. There were significant pledges from mining companies, automotive manufacturers, telecoms companies, and infrastructure developers. But crucially, I think, was that the government is now being seen to giving business its space to help grow the economy, which is a welcome move. So we had Minister Mboweni remind us that the path we were on got us into trouble, but we had President Ramaphosa show us the way of how we can get out of it. Looking ahead at this week, after a volatile and negative week on global markets, investors are likely to remain pensive going into trade today, and we also have our employment statistics released on Tuesday, which are expected to remain worryingly poor. Have a good week.